right, good morning. Welcome to the February 19, 2025 meeting of trustees of trust funds. And a quick roll call will indicate that Peter Weeks and I are here in conference room A, and Dana Levinson is with us via Zoom. So first item is the approval of the minutes, but for the last meeting, which are not finished, so we will defer that to the March meeting. And I, just to remind you, Judy, when our last meeting, we amended minutes, so.
An amended one, yes.
Yeah. Okay,
So move.
Second.
all right. Roll call. Dana?
I vote yes.
Yes.
And the chair votes yes, okay. All right, so the first item of business that we can handle is a request for disbursement for the Clipper Band.
I move the request be granted.
Do I hear a second? Okay, well, before we take a vote, we have a gentleman with us who is here to address that request. Would you like to introduce yourself?
Good morning.
And if
My
you
name is
could-
Eric Gagnon. I'm the
you
band.
Pull the mic.
sorry. Good morning. My name is Eric Gagnon, the band director for Portsmouth High School Band, and I would like to thank you all for giving me the opportunity to come and address the board as I make a formal request for some of the funds to be dispersed from the Clipper Band Trust. We are taking the band on its first trip since before COVID. So we're getting back to doing our every 4-year Florida trip, and we have a lot of excited kids, and things are a little bit tighter for families these days, so we're in need of some scholarship assistance. So the funds from this account that are available to us will go directly to help our students in need in the band program.
You've given up on the the Washington trip then? The Apple Blossom Festival?
They've not. It's a different. Yeah, they haven't been doing. It's not like it was back in the Bill days. So the Florida trip to Disney World offers the students some amazing opportunities to perform, and the educational component, the workshops are phenomenal. They get to work with the performers in Disney. The band is going to be taken backstage for a 3-hour workshop where they will be putting together a soundtrack to a Disney movie trailer. So they get to read through dozens of Disney selections that the kids are going to be familiar with, and then they get professionally recorded and get to see the whole process of how to be an actual studio musician. So it's just an amazing experience for them to get them excited about looking at music from just a different perspective. So that educational component is a huge part of why we go down to the Florida part. So it's just some great things that they do. So again, on behalf of everybody in the band, I'd like to thank you for considering our request.
How many participants?
So we're going to be taking, this trip is going to be a department-wide trip. We're going to be taking the band, the choir, and the drama. All right, program. So all the performing arts kids. We have a number of students who are in band and choir and drama. But the funds for this request are going to be specifically earmarked for the students who are band students who are in need. We're going to be taking 89 students and 12 adults.
That's great.
So.
Wow. So is this their first trip anywhere, or since before COVID?
Yeah. No, as far as the music department, our performing art, this is our first big trip. Yeah. So this is the first. We had to get our numbers back up because a lot of the programs require a minimum amount to be able to perform and participate in the workshops. So part of our rebuilding the program after COVID has been trying to build up to this moment. The trips are part of the experience that helps to sustain and grow the program as we move forward. So they're really excited.
That's great.
Good. Well, good luck.
Thank you very much. I greatly appreciate it.
And just for the record, for the folks at home, so to speak, the request is for a disbursement of $6,100.
Actually, it's 6. I apologize, I made a mistake on my sheet. It's 6 in his letter, so,
Okay, all right, so it'll be $6,000.
yes.
And per the terms of the original Clipper Band Trip Fund, the fund can disperse up to 75% of the accumulated income. And Judy has provided us with records showing that the accumulated income is slightly above that $6,000, so we're within the terms of the trust. Okay, any other questions? Hearing none, I'll call the
One quick
question.
question.
Oh, go ahead.
Eric,
Yes.
How is this band trust funds, do you work annually to replenish the funds in the trust, or do you depend strictly on contributions?
This trust here that you manage is independent of what we do. We have our own fundraising that we do to supplement the program. So I have not, in my 31 years, had a connection to the trust. I've been made aware that it has been available to me as long as I stayed within the guidelines that are set,
Okay.
for the trust. I'd love, I would love to be in a position to add to it.
Judy, what's our principal balance in that trust?
Principal balance is over 75,000.
Wow, okay. Thank you.
Yep.
So by reviewing the documents, what I gleaned was that Bill Elwell used to maintain a fund at the school, and upon his retirement, that fund was transferred to us to manage, subject to the terms of the trust document that I sent you, I guess yesterday, the day before. So that principal has been sitting there, and every few years, when it accumulates enough to be of significance, it's dispersed. We can just barely hear you for some reason or other, Dana.
Dana, can you turn up your mic? Can you turn up your
Is this-
sound?
Is this better? No?
Not really, you're very soft.
Yeah.
I have my mic all the way up.
Okay, all right.
All right, I'll be quiet.
No more questions. Okay, I will call the question. All in favor, starting with Peter,
Yes.
Dana,
Yes?
and the chair votes yes.
Thank you very much on behalf of the band.
Just before you came in, Peter was wondering if you had any room for, a
Chaperone?
chaperone.
You want a chaperone? I'm sure we could squeeze you in.
You're welcome to stay, but you don't have to.
I've got to actually get back to class, all right? So thank you very much.
You're welcome. Thanks for coming
Thank
in.
you.
I'm sure we'll see some fundraising efforts throughout the community.
Oh, yeah, ongoing.
Still do the Super Bowl subs?
We've not done the Super Bowl subs. Again, with COVID, all kinds of stuff had to stop, and the food handling was something that didn't, it wasn't, really something that people were comfortable with.
Yeah.
I'd like to get back to that.
Yeah.
Right? I think we're at a point where we can start to get back to some of those things that we did before. So we've got some other things that we've been doing that have been very successful for our fundraising efforts.
Eric,
Well-
when are you going, April?
Yeah, April vacation. Okay?
Yep.
All right, thank you very much.
Good luck.
Have a wonderful morning. Dana, nice to
Thank
see you.
you. Thank you, Eric.
All right, next item on the agenda is the Prescott Park and Marine Maintenance contributions for fiscal year '26.
Yep.
We have the reduced size version.
I'm sorry.
All right, so you don't have the larger one, okay.
I don't. I have my copies that are printed out in color, if it helps you. If you want to see it, see if it's any better for you.
Yeah, I'm in the.
You got it anyways? Yeah. I don't know if this is any better. You did too? Okay.
Okay.
So the request is 241,900.
That's the recommended. What I did was down below, you can see I did 3 scenarios for you.
Yeah.
I did one at last year's rate, which was 3.5%, which came in at the 219. Then I did a middle of the road at 3.45, which came in at 215. And then a lower one at 3.4, which came in at 212. I'm recommending the middle of the road one because I know that, everything, the costs of everything are going up exponentially in the park. So I've tried to find that balance because I know that you all like to be a little conservative, especially not knowing what the market's going to do. So I'm recommending the 3.45, which will still give a bump up to Prescott Park. And I asked for an additional $1,000 for the Marine Maintenance Trust because those costs are going up exponentially as well. So the DOCWA program has gone up another $1,000 for next year. So that's my recommendation is scenario A, but I mean, it's up to you what you all are comfortable with.
Yes.
I move the recommended amounts.
Okay. So just to be clear on this, Judy, the
Yes.
241.9 that Peter's talking about is both the Prescott Park and marine maintenance.
That is correct. It'll be $215,900 for Prescott Park, and then $26,000 out of the Marine Maintenance Trust, which every year there's an amount that comes over from that, for a total of $241,900.
Right, okay. And so that has, the marine maintenance has nothing to do with the rolling average. That's just.
That is correct.
Right.
That's just the added amount of what we're
Yeah.
going to give to help out the Prescott Park/docks.
And how have the dock rental reservations?
We opened it up from 12 to 16 seasonal slips this year. We had 29 residents apply, so they have all been taken. And we'll still be doing, I believe we'll still be doing, the other rentals as well, the overnights and the day hourly rentals. At least that's the last I heard, so, but yes, all the seasonal slips are taken, and that's already determined for the year.
Okay.
Yep.
And that $26,000 figure is on the assumption that the revenue comes in. If it doesn't, then we basically disperse.
Correct, but it's, I mean, I know what we're getting for the seasonal slips, and I know where we're at, so that is correct, though. If something were to happen and we were unable to collect the funds, then there would have to be a discussion about that.
Okay. And I noticed on, I'll call it a P&L for lack of a better term, but that the license revenue was down.
It's down right now. We haven't received everything. That is determined, the city manager is determining what the licensees are paying. Not everything's come in. If you're looking at budget, not everything's been received in yet for the licensees. A lot of them pay right before the season starts. So,
Okay.
yeah.
All right, so that's a reason. So this is
Yes.
not a calendar year, we're on a fiscal year.
That's
Okay.
fiscal year,
Okay,
yes.
all right.
That is fiscal year, correct.
Okay. Any further questions on this calculation and Judy's recommendation? Dana?
A quick question. I'm trying, it's hard for me to read on the computer here. Last year, Judy, what was our percentage payout?
3.5%.
That's in the little pink block
It's
on
in,
the right-hand side,
Yeah.
lower right hand.
it's in the, it's actually blue, Dana, if you can see. It might be blue on yours.
Pink on mine.
Yeah.
And this year, you're looking for 3.4?
4 or 5, correct. And it's still more than what was given last
Right.
year.
Right.
But I know that there's a balance between,
No, that's good.
Yep, okay,
I think it's great. Thank you.
yep.
All right. If there are no other questions, we'll call the question, or comments, we'll call the question. All in favor, indicate aye, starting with you, Dana?
Aye.
Peter?
Yes.
And the chair votes aye.
Great.
Okay, we're right on time. So a couple things on the various trusts that we got outstanding. In your packet, really for informational purposes, but I'd ask you to take a look at it if you haven't already. This is the draft that I prepared after our last meeting based on the conversations that we had and discussions with Susan Morel. I have sent this to her for review and comment and asked that if she, unless she has some changes, that she forward it to the Attorney General's office. And I checked with her, and she's still reviewing it, so nothing has happened, but you've seen and approved the schedule for Exhibit A. We did it at the last meeting, so that Exhibit A is now attached to the non-judicial, draft of the non-judicial settlement agreement. So this is what we're working on. It's a little longer than the typical ones received because I wanted to lay out the history because we don't have other documents other trust documents like we typically have. So if you had a chance to look at it and you have
Yes.
questions, I'd be happy to answer them. Okay. Hopefully, by our next meeting, we will have sent it to the AG and have some feedback on it. Hoping to be able to get these medals straightened out for the coming year, which is coming up soon. Okay, so the other ones, I have been working with this, well, I should say, so the city attorney has been working with the Housing Committee on a new trust, the Portsmouth Housing Trust. No, yeah, is it housing or? I brought the document with me too. Yeah, the Portsmouth Housing Trust, and it's a new trust that will replace the Workforce Housing Trust that was created back in 2009-10 that was never funded, and it will be specifically used for not workplace, but what they call below-market housing. And it will be funded by the contributions that are made by developers under the new ordinance that allows for residential construction in what used to be an industrial commercial zone behind Commerce Way. So there's going to be some monies coming.
And this is monies too on the McIntyre settlement.
Yeah, so I was going to say, and it's also part of the settlement, so I think they're expecting a $500,000 contribution fairly quickly. And so Susan has been working, Susan Morel has been working on a draft of that. I've offered her my comments on it, and I know she's working with Suzanne Woodman as well. And
Do we have a copy of it?
I have, at about 9:30 last night, she sent me the latest version, and I didn't have a chance to print them out.
All right.
Again, it's a preliminary draft. I'd be happy to circulate that to both of you.
Well, I know it's been in discussion with the Housing Committee, and I would just like to see it before it gets to final form.
Sure, no, do you want to see the current version, or do you want me to wait? Susan told me she's expecting to have a version for me to look at shortly, but I'll give you the one that's currently circulating if you want. Okay. I think that they're probably going, whatever the version is, they're going to want to have us approve it at our next meeting because they're ready to receive the funds. if you, I did listen to the recorded version of the Housing Committee meeting last week. If you listen to that, it was quite an interesting discussion about how that committee envisions this fund to be used. I'm not sure that that's something that the full vision will be adopted. It's almost like a revolving loan fund.
Right.
But anyway, that's where we're standing on that.
Hey, Tom,
Yeah.
excuse me, just a comment. The name of that fund maybe could be clarified so it's distinct from the housing endowment that we manage.
Yeah, well, okay, I'll make a note of bringing that up with her. It was one of the, so as I said, 15 years ago, the city created the Workforce Housing Trust for funding workforce housing, and now they're changing it to the Portsmouth Housing Trust. What's the formal name of the endowment?
Portsmouth Housing Endowment.
Okay, well, that's a good point. I'll bring that up.
Thank you.
And the other update that we'll hear next, at our next meeting is that the Sister City Committee has finally got a draft of their new and improved version of the Sister City Trust, the new document. We haven't been provided a copy yet, but it's in the final stages there. Bob Sullivan, who's on that committee, expects to come see us with a revised draft for our March meeting for approval. We'll have an opportunity to see that before it comes out. So
Have our comments been included?
I haven't seen the latest draft, but they know what our comments are. And so they've got Christine Fries from the library is working on that with Bob. They know our comments, but they haven't given us a new one. I actually spoke to Bob yesterday. He said that he will make sure he gets a draft of it to us in advance, so we'll have an opportunity to comment. Now, there is no rush on that, so even if he comes and meets with us and they have issues in March, they'll be able to revise and come back in April. All right. Okay, so I guess, unless you want to, so the TD folk are coming on at 8. Do you want to
Correct.
have us sign checks now, or? I don't want to review the investment policy until we have them on.
Correct.
Fine, so.
Correct. I sent out a copy of the backup for the first payment for the fiscal year '25, what we just voted for the fiscal year '26. This is the first half for fiscal year '25 from both the Prescott Park and Marine Maintenance funds. Total payment this time around, half of it is $116,550, which is the total voted amount that you voted for fiscal year '25 was $233,100. So this is the first half. After reviewing through December, this is the first part of this payout. So I have this check to be signed. And I also have 3 scholarship checks.
With this payment, what's the balance on the,
Half, it'll be, the rest of it will be in June, and it'll be the
no,
other.
I mean on the marine maintenance loan?
I mean, the money was there.
Okay, that's all
Yeah.
right. I just thought you might know. I just,
Sorry, I did it earlier, and unfortunately, I can't remember.
all right.
Thank you. Here's this one. There's those. Thank you, Peter.
Thank you. Anything else on your,
I do have one other item. Citizens Bank contacted me because Judy Belanger was still listed as a signer on the trustee's checking account, so she sent me a form letter to be completed.
Yep.
That takes Judy off
Yep.
the account and puts Nathan Lenny on.
okay?
And so I've drawn it up, and she just asked that the chair sign it, and it does have, that you, Peter, and Dana are signers, are the main signers, but Nathan is that city representative as a signer as well. Judy was always on the checking account for as long as could be, and I just didn't, no one thought of it, to be honest, that we needed to take her off, so.
Sure.
So it's just a basic letter, it's their letter. Actually, they sent me the format, so.
Which account is this? It just-
That's a checking account.
Oh, okay.
Peter, would you like to read it?
Do you need a vote to go with that?
Ken, if you want.
Right.
If you're more comfortable with it, that's fine.
No, we'll do it because they may ask for it.
Yep, that's fine.
All right, so just to make this action official, I would entertain a motion that we remove Judy Belanger, our former finance manager, and replace her with Nathan Looney as signatory on our trustee of trust fund general checking account with Citizens Bank.
So move.
Do you hear a second?
Second?
Any discussion on that? Hearing none, we'll call the roll. All in favor? Peter?
Yes.
Dana?
Yes.
And the chair votes yes.
Great, thank you so much.
Thank you. All right, you're all set then, Judy?
I am, yes.
Okay. Do either you gentlemen have anything, any new business you'd like to address before the TD folks come online? Okay.
That was Susan that stopped. She said she just wanted to let you know that she's here if you need anything from her, but that she had spoken with you last night, so.
Yeah, okay, yeah. I told her she's got the flu or something. I said, don't come in here.
Yeah, she's here. Hi, John.
Good morning, Judy. Good morning, Dana.
Hi, John, how are you?
Morning.
How are you doing?
Morning. You probably can't see us very well, but we're in that big room.
Yes. Hi, Tom. Hi, Peter.
What's the temperature up there?
That's a good question. I'm gonna go with low 20s, but let me see.
Oh, wow.
That's a guess. How about down there?
We started this morning in single digits, so.
Yeah, I'm off by double digits. 7 degrees. I must have been thinking about the high.
Yes.
Yeah, much better. I read this morning, negative 46 or 39 degrees in Bismarck, North Dakota.
Ugh.
Yeah, that's why we don't live in Bismarck, North Dakota.
Yeah, northern New England doesn't seem so bad right now.
Oh.
I know Suzanne will be joining us, but I'm happy to get started on the investment review. Up to you folks.
Okay, well, she actually came on around 7:30, and we told her we didn't need her until 8, so. But I don't know, do you want her part of the performance review?
She's familiar with the dialogue, so I can get started on that, and then I know we want to talk about the policy today, so.
Okay,
Yeah, no, I'll jump right in.
all right, let's
Let
do
me
that.
Share my screen with
Does
you.
anyone need copies of anything?
No. Before you start, can I just make a request that the investment review, the next time we do one, you mail it to us like you do the monthly statements, just so that we have it a week or so before the meeting?
In all fairness to John, he did send it, but I held it and sent it with the packet, so that's not John's fault.
Well, but I want them to send it.
Directly to you, is what you said.
Yeah, I mean,
Do you want it mailed or email?
no, I just as soon have it, mail it, let them make the copies.
It's no problem at all.
Hi, Suzanne, welcome back.
Thank you.
And if,
I got started on something else.
you know, maybe the time we have the reviews, we have the meeting like the last Wednesday of the month, so that you have time to get it out to us a week or so before the meeting, so we have a chance to review it.
It's no problem at all. Judy, could I trouble you to send me the addresses where the hard copies should be mailed for everybody?
I absolutely can do that.
Yeah, I will, I just as soon get it via email, frankly, because I'm trying to get rid of paper.
Judy,
So-
just let me know how folks prefer to get it, and we will adjust accordingly.
Okay.
All right, you have the floor, John, take us through.
Thank you. Did I succeed in sharing my screen? Is everybody looking at the cover page?
You
We
did.
are,
Okay,
yep.
great.
Good.
So I'm going to jump ahead to this page, which you're used to seeing. I'll try to blow this up for you. Again, as I say at the start of every meeting, all 4 portfolios are managed identically. So in this case, scholarship here is first in the deck, and I'll make my comments kind of specific to scholarship, but it applies to all the accounts. This data is a snapshot as of December 31st. I know you've probably seen the January dashboard at this point, and it's been a good start to the year. The scholarship fund was just under $13.5 million at the end of December. And if I just nudge this over a little bit to the right, the specific asset allocation at 12/31 was 74% equities, 23% fixed income, and 3% cash. Cash tends to build. The cash target's 2%. It tends to build a little bit over the course of the quarter, but in line with your IPS targets and with the model targets overall. The portfolio continues to be comprised of 10 passive exchange-traded funds, consistent with your current investment policy. And you can see on the right here, you've got, this is breaking down the various asset classes. You can see within equities, which are the first 5 categories here. You're diversified across large cap core, which you can think of as the S&P 500, about 55%. There's a 10% tactical allocation to U.S. large value, 5% allocation to small and mid cap stocks, and then 5% to international. So even though we've got just 4 funds making up that composition of the portfolio, you've got thousands of underlying securities there, so highly diversified as your policy warrants. And then on the fixed income side, we actually have more products, 6 different ETFs comprising the 25% allocation to fixed income. Part of that is 3 of those are giving us very discrete exposure to various parts of the yield curve. So you've got 3 treasury strategies, a 1 to 3, a 3 to 7, and a 7 to 10. That gives us a nice 1 to 10 year exposure to the yield curve, but also gives me the ability to make tactical adjustments to any fixed income calls that we may have. But at a high level, that 25% is predominantly in an intermediate bond strategy, with a tilt towards U.S. Treasury securities, very high credit quality overall, AA average credit quality. However, you do have a very modest allocation to high yield, just under 2%, and that has benefited the portfolio. I'm going to jump to the...
John,
yes,
John,
please.
Excuse me. I just interject 1 minute. When we get to the discussion of the policy review, I wonder, you referenced the fact we're in ETFs.
Yes.
Index related. I'm wondering if we should note that in our investment policy. And we can talk about that when we get to it. I just want to put it on the radar for now.
Yeah, and in fact, your policy does speak already to a preference for a passive approach to investing. So we can come back to that, but there's consistency there currently, Dana. Yep. Jumping over to the left here, just high-level performance. I'll show you more detail in just a second, but finished up a very strong year that would have been even stronger were it not for interest rates rising pretty meaningfully in the 4th quarter of the year. So you can see year-to-date net of fees, the portfolios were up 16.4%. For the quarter, just under 0.5%. All the fixed income, possibly with one exception, were negative in the 4th quarter, not due to any credit concerns, purely due to the math associated with rising interest rates and the inverse relationship with bond prices. And I'll go into more detail on that in a little bit. But again, finishing up a very strong year. This benchmark comparison here, this is kind of the system's default benchmark. Your portfolio looks really good against that, which is atypical, simply because this standard default benchmark only uses the S&P 500 for domestic equities. There's no mid cap in there, there's no small cap, and the S&P 500 has kind of been the place to be. So your portfolio's performance there looks really strong. It's the underweight to international that largely describes the benefit here. And it's also outperformed your policy benchmark for the same reason, and I'll show you more detail on that in a second. And then just lastly, the overall yield on your portfolio is just over 2% now. So that continues to creep up as all of your fixed income investment cash flows get reinvested in a much higher interest rate environment than when we built this portfolio back in mid-2021. Now I'm going to show you the quarterly performance. This may be a little tricky to see. Yeah, it's going to, fortunately, I can't make it bigger than this, but I tried to highlight a few of the points that I wanted to mention. So this is each row here, as you've seen in our previous meetings, is a holding within the portfolio. And then you see the percentage allocation of that holding, the style. So this top row is your S&P 500 index exposure. And then this is just the 4th quarter. And so Fidelity, the S&P 500 was up just under 2.5%. The 4th quarter was kind of the mirror image of the 3rd quarter. In the 3rd quarter, your value holding dramatically outperformed the rest of the market. We had a big correction in tech stocks in the 3rd quarter, complete reversal in the 4th quarter. We had the election behind us, a bit of a sense of Good news for all the tech companies in terms of the current administration, and we saw money kind of flow back into the high growth tech stocks. So you can see that dichotomy here. Somewhat surprisingly, at the very bottom, small cap stocks had amongst their best quarter of the year, partly on expectations of just more robust growth ahead, and slightly less impact from rising rates. And then across fixed income, you can see every category was negative except for one of your high yield, the bank loan category. Bank loans are floating rate, and as a result, they don't have the interest rate sensitivity as you have on all the other fixed income categories, which are almost entirely fixed rate bond products. And so that was how we finished the year, and the negative returns on bonds really hurt overall bond performance for the year. It was a positive year for bonds, but obviously in a quarter where you're losing 2 or 3 or 4%, put a big dent in bond returns for the year. So equities kind of drove the day, and I'll show you the whole full year 2024 performance here. So exact same chart, except the start date is 12/31/23, so this is calendar year 24. S&P 500 up almost 25%, significantly higher than value stocks, which nonetheless had a really good year at 14%, and remain a compelling valuation relative to the S&P 500. International was a big disappointment in the, for the year and in the fourth quarter in particular. International stocks look really compelling from a valuation standpoint, but the market just isn't seeing the growth opportunity there. So they definitely look cheap relative to the U.S. The market has yet to reward them. We have seen a bit of a reversal this year, so we'll see how that plays out. What happened in the fourth quarter last year is the increase in interest rates in the U.S. led to an 8% rally in the U.S. dollar. And so when you translate international earnings back into the U.S., that dollar strength translates precisely into lower returns for international stocks. And then you can see for the year, intermediate bond strategies up about 2%. Shorter term bond strategies, you think cash last year yielded you over 4% for the majority of the year. So short bond strategies did quite well. And then high yield has been the most significant outperformer in the fixed income space. I will tell you that you have a very modest exposure to high yield, and we actually trimmed it throughout the year. Tactically speaking, TD is currently underweight high yield. The spreads that an investor can earn on high yield bonds, and I'll remind you, high yield, the asset class is referred to as high yield. The bonds themselves are all below investment grade. So this is the riskiest component of the fixed income market. The additional spread that we can earn today on high yield over treasuries is about as low as it's ever been. So that market's really priced to perfection. Your modest allocation has definitely benefited you in the high yield space, but no, I'm not losing any sleep at night if there's any cracks in that market. You've only got a 2% exposure there. And then I just wanted to show you a higher level performance chart. So this one I think I'll try to throw up a little bit for you. So again, fourth quarter, we just eked out a positive return at just under 0.5%, again, net of fees. And your IPS return for the quarter, and you would have seen this in the dashboard as well, minus 1%. The reason for the outperformance here, both in the quarter as well as for the year here, where you can see 16.4% for your portfolios versus just over 14 for your IPS, comes down to three things. We're overweight U.S. relative to international. That was tremendously helpful in 2024. Also, we have no REIT exposure, which is one of the targets in your portfolio. REITs have just been, obviously with everything post-pandemic, anything commercial real estate has been challenged. I like the fact that you have REITs identified in your policy. The day will come when we want to add that allocation back in, but the underweight to REITs has benefited the portfolio. And then we've been also slightly underweight international REITs. And within fixed income, the slight overweight to treasuries has helped. And then custom period here is just since inception, which I realize isn't that long when we brought these portfolios on board, but just under 6.5% since mid-21, which is particularly impressive when you think about the fact that, you know, within 6 months of building the portfolio, we had 2022, which was one of the worst years for stocks and bonds in recent memory. So the portfolio, which again is aligned with your IPS, we have some slight tactical underweights and overweights, but largely mirrors the asset allocation of your IPS has served you really well. With that, I'm going to jump over to the market update and just go through this really quickly so we can get to the portfolio discussion. You've seen this page before. This is just quarterly as well as 1-3-year highlights of fixed income indices on the top. I highlighted the U.S. aggregate bond index down 3% in the fourth quarter and just over 1% for the year, consistent with all the points that we just made with your portfolio. Down at the bottom here in this category, you can see high yield, again, the outperformer both in the fourth quarter and for the year. And then within stocks, 2024 was another year of U.S. large cap growth, i.e. The mega cap tech stocks, the NVIDIAs, the Microsofts, the Apples, the Amazons, the Googles, all continuing to see strong inflows despite really high valuations at this point. So the S&P 500 was up just under 2.5% last year versus 7%, I'm sorry, in the fourth quarter versus 7% for large cap growth. Again, as I said before, that was really a reversal from Q3. Year to date, U.S. large value is actually outperforming both large growth and the S&P 500. So that slight tactical allocation that we have is there's been quarters where it's benefited you, quarters like the fourth quarter here where it didn't. But I really like that allocation. It's consistent with TD's current view, and it balances the fact that the S&P 500, because it's cap weighted, you know, like over 30% of the S&P 500 is now in technology. So the allocation you've got to U.S. large value is helping to offset that a little bit. And then again, really tough year for international in the fourth quarter in particular with the strength of the U.S. dollar. I'm going to jump ahead 2 slides to this is what the yield curve did in 2024. So the green line is where we ended the year. The blue line is where we started the year. And the x-axis is just the U.S. Treasury curve. So on the far left here, you have 1-month Treasuries all the way out to 30-year on the right. And this picture is just a great reminder of what you've heard me say before, which is to outsmart the bond market, you got to get 3 things right. You have to get the direction of rates right, the magnitude of the change right, and the timing right. And it's extraordinarily difficult to get any one of those right. In a year going into 2024, everybody just expected rates to drop. And lo and behold, from 2 years on out, interest rates actually rose last year, despite the fact that the Federal Reserve cut rates from 5.5 to 4.5 throughout the year. Other observation here is, which I highlighted, is we're no longer in an inverted yield curve, which is a position we haven't been in for quite a while and is a much healthier interest rate environment for the economy. You know, near and dear to me in the banking industry is the fact that the banking works much better. Banks, by and large, borrow short-term and lend longer-term, and when longer-term rates are higher, it just supports the whole business model, and our economy is very financial-based, so credit and lending can operate in a much healthier environment when the yield curve is positively sloped. And then secondly, just the overall level of rates. You know, you're seeing at the short end just under 4.5 and a little over 4.5 on the long end. We would describe this as a relatively flat yield curve, but the overall level of rates is great. We haven't seen a yield curve with rates this high consistently since the early to mid 2000s. You know, over the last 2 decades, your portfolio has lived through a period of largely zero interest rates. So we've gotten off the zero bound for now, and investors can earn north of 4% without taking any risk in fixed income as a much healthier environment. This chart is not nearly as meaningful as it was when we put it together back in December. This is our prediction. So this is just the Fed funds rate. So this gray line that you see here is the one interest rate that the Fed directly controls, the overnight rate that banks lend to each other. And you can see the peak where they hit 5.5% and then started cutting in September. We can really kind of throw this out the window. So we've gotten a 4.5 now. We did not predict a pause at this point, but that's essentially where the Fed is. We thought they were going to get to 3.5 by the end of this year and 3 by the end of next year. We are in the process of revising this. In fact, our economists are starting most of their updates these days with we are writing this in pencil. Things are just changing so fast. It is so hard for them to predict the outcome of the initiatives of the current administration. And most important, and really good news for investors, is the economy is doing better than we would have forecast. So the Fed just doesn't need to cut. I'll show you two charts here. I'm going to just jump back to this one. So here's CPI year over year. Obviously, we are still coming down from the inflation that we saw during the pandemic. Unfortunately for the Fed, they're trying to get these bars down to 2%, and we seem to be stuck around 3%. And the statistic we got earlier this month only confirmed that. So that's one reason why the Fed seems to be in pause mode. And then the next one is the unemployment rate. We're up from levels seen about a year ago. And again, there's so much noise associated with the years during and just after the pandemic. But unemployment isn't rising. It seems to be holding steady in the low 4s. Now, obviously, if you work for the U.S. government, you're probably feeling very different about this right now. And again, the reasons we seem to be writing all of our forecasts in pencil. But between the Fed's two mandates of stable prices and stable employment, there doesn't seem to be a compelling reason for them to cut rates much further at this point. And then I'm just going to jump back to TD is constructive on stocks for just in terms of our tactical views for the year. Nothing that requires me to recommend any changes to the portfolio. We expect the S&P 500 to grow earnings about 15% this year. A lot of that will be concentrated in the technology sector. However, over the third quarter of 2024 and to start the year, we're seeing broader participation across the other sectors of the economy. And so again, a lot of noise as we start the year, but TD is quite constructive on stocks again. Valuations are high. We do not expect another 20+% return year for the S&P 500, but high single digits, something closer to historical norms would be great. And from a fixed income perspective, you're now earning over 4% again, risk-free in fixed income markets. So you put the two together, and we're looking forward to what should be a pretty good year, despite what everybody expects to be higher levels of volatility. And by volatility, I simply mean just expect some downdrafts in the stock market simply due to all of the unexpected outcomes of the initiatives in Washington right now. But again, to conclude, great year. I went through everything. Sorry, again, speaking of DC, I've shown you a couple of charts on how the stock market does, depending on whether there's a Democrat or a Republican in the White House. This chart looks at it a little differently. It says, okay, who's in the White House, and then what's going on with Congress? Is it Democratic, is it divided, or is it Republican? So we're currently in this spot right here, Republican Congress, Republican in the White House, although it's pretty close, right, as you look across Congress. So you could almost argue we're kind of in between these two scenarios. Either way, the charts I've shown you in the past all suggest that, over most administrations, equities tend to do pretty well. And so there's really nothing here that's guiding our tactical views of the market. Any questions before I jump off this deck here? Okay.
Nope.
So with that, let me stop sharing this screen. And good time to segue to the investment policy discussion?
It is. Yep.
Yep.
That was a
Suzanne,
good
can
overview, John. Thank you.
Yep. You're welcome, Dana. Thank you. Suzanne, can I turn it over to you? You are on mute, by the way.
share the screen. That was not the right one. Share.
While you're doing that, Suzanne, I just want to mention, if I can find my notes here, as it relates to the policy, specifically from an investment perspective, the objectives that you state in the policy, which we're not recommending any changes to, are completely consistent with your current investments. Your goal of preserving and growing the assets in real terms, inflation-adjusted terms. You look at the portfolio from a total return perspective. You state a perpetual time horizon, which is very important to me when it comes to the overall level of equities in the portfolio. You emphasize global diversification, which we have, and we'll talk about it more, Dana, but you also mention a preference for passive strategies. And all the strategies in your portfolio today are passive index-based strategies that also has benefited the performance of your portfolio. It's really hard for me to find, and we have hundreds of products on our platform, it's really hard for me to find active managers, particularly in the U.S. large cap equity space, who are beating the S&P 500 these days. For reasons we've talked about in the past, most importantly, that's where most of the funds are going. Most retirees who are using target date funds for their 401k or IRA contributions, those tend to be deployed into passive strategies. So it's almost a positive feedback loop right now, where it's just extraordinarily hard to beat the S&P 500 if you're charging fees, which most active managers need to do, in excess of the passive products that you have. So from an investment standpoint, there's no changes I would want to make to the policy. And with that, Suzanne, are you still trying to share? Because I can do it on my side if you want.
You would please, because I have it open on my computer, but it's not sharing properly.
Not a problem. Are we now looking at the last graph we talked about?
Yes.
Yes.
Yeah, okay. It's the dashboard. Here we go.
Excellent, thank you.
Yeah, I'm sorry, Suzanne, we need the Word document, which I have right here. If I drag this over.
Yep, there it is.
Okay, yeah, just tell me where to go.
Okay, so it didn't have too many comments to put in because it was pretty strong already. But if we go down the next page, I did add a section to address conflicts of interest.
I thought that was great.
Not super exciting, but just add a little extra coverage there. And then further down, okay, we can continue. The rebalancing section, where it says that the investment advisor will make recommendations to rebalance and what have you. I did change that so that we will address the rebalancing and we'll take care of that. And the reason why is because our system is set up that we automatically rebalance on a quarterly basis. So the way the investment policy statement is written is doesn't really quite reconcile with the way the portfolio is functioning. It does and it doesn't. I think it's just a little clearer if we say the investment advisor will manage the asset allocation to leverage tactical opportunities as they arise, but will always remain within the boundaries.
Interesting.
Because technically, according to the contract, we do have discretionary authority. And we always communicate with you when we're going to make any changes. Any thoughts or concerns about that?
Right, my only question, Suzanne, is it seems the wording's a little conflated with rebalancing and tactical opportunities. Rebalancing doesn't necessarily imply a tactical change.
You know, as you mentioned that, and as I read it again, it does seem like we're addressing two different things in the same paragraph.
Yeah.
So I can go back and make an adjustment on that.
I mean, I'm fine with it being a rebalance. The fact that the advisor does that automatic on your, but on a tactical change, it might be preferable to have a recommendation before it's adjusted.
Right, we could maybe just even strike that first sentence.
Right.
Move it to a different, yeah, okay. I'll make an adjustment there and send it back to you all. Then, John, if you would
Before you,
like to go further?
before you move on, Suzanne,
Yes,
so this was one of my thoughts in reading these comments yesterday evening, separate from the ones that added the commas. So you folks had a chance to review and comment on this when we had a major rewrite just after you took over as investment advisors for us. And at that time, you did not recommend all of these changes, presumably. And I know that there was some concerns or issues that came up in reviewing your management letter agreement that we modified. And so I just want to make sure that, well, I guess a twofold question. One is, when you say that the rebalancing item, for instance, is you're making a change here to align that with our management agreement with you folks. Did you go back and look at our management agreement? Because we made some changes in it that are varied it from your standard management agreement, if I recall, back in 2021. And so is all the changes in here that may have reflected on that management agreement, did you actually have a chance to go back and look at that?
I didn't look at the addendum, but it's funny you mentioned the language in the IPS, because this section under rebalancing, I had the language written this way and it was changed. So I was changing it back to the way I had it. So I'll go check the addendum and see.
Yeah, well,
I think we can probably rewrite this in a way that makes everybody content. And I'll check the addendum again to make sure that it makes Bob happy.
Yeah. Well, Bob is no longer the city attorney, but I've asked our current city attorney to review this as well, so I'm going to go back after we finalize this and we get whatever revised version. I'm going to have our city attorney review it again. But, so some of these things may have been affirmative decisions, not just an omission because we weren't paying enough attention, but an affirmative decision to keep this decision-making on the rebalancing in the hands of the trustees as opposed to having it in your hands. So I just wanted to kind of alert you to that.
That's a good point. I had forgotten about that. So I will definitely go and check the addendum.
Okay, great.
Okay, so John, I know there was a little bit more that I had commented on. Oh, this part, yes. This is another area where two different concepts kind of got combined into one section, so I broke it apart a little bit. It was about gifts of securities and prohibited investments. So I broke it up. Generally, the rule of thumb for tax-exempt nonprofit entities is to sell gifts upon receipt. The idea being that you're focused on managing the organization and handling the day-to-day distributions and things like that, not worrying about should we sell this stock today or sell it a month from now or what have you. So I used that methodology and said that the securities acquired through gifts or bequests should be liquidated upon receipt and reinvested per the strategy outlined in this investment policy. But should there be donor restrictions or other circumstances preclude the trustees or the investment advisor from taking such action, those gifts could be held in a separate brokerage account. So I have another client who was given a gift of Amazon stock. And we had a very serious discussion about whether or not to sell this stock. Well, the gift was given to them from Amazon, and then they felt guilty. Like they would be offending Amazon if they sold the stock. And I said, really, they don't care. But what they ended up doing was selling half of it and putting the other half in a brokerage account. So that's how they handled it. But sometimes the donor will say, I'm going to give you this stock, but you can't sell it. You have to just live off the earnings or what have you. So this kind of covers you both ways. And then I made a separate section for the prohibited investments. And then that last little section is just something that's new and something I've been seeing. Something that's been discussed with other nonprofit organizations as they've been addressing whether or not to allow investments in companies that work in the marijuana industry, or whether or not to include cryptocurrency in their investment portfolios. And I figured we might as well address it.
Sure. So on that last item, now that certain segments of our government are engaging in cryptocurrency.
I'm very excited about that.
Well, and now that marijuana seems to be legalized in like 40 states or something, are you? Is this recommendation a little old, I guess? Or are you way out advanced on what's going to happen in this field?
Well, it's still federally illegal, marijuana. And so no bank will touch it. Actually, most financial organizations won't get involved in it. It's still pretty much cash only. So that's an area where I know we can't invest in anything marijuana related. And I know we had a client that was an insurance agency who insured a building that happened to have a marijuana dispensary in it. And the due diligence that we as a bank had to go through just to allow that building to get, or that insurance company to be a client, was incredible. So,
Okay.
many layers of, it's a little cumbersome. I think it's going to be a long time before marijuana is treated like beer.
No, I understand that. I was more thinking the cryptocurrencies. Is the reasoning the same there? I don't know what the regulations are on financial institutions.
Well,
I don't know.
that's the thing. The regulations are very unclear, and I can't explain it.
Okay, well,
I mean, if I can't explain it to you, I really can't justify putting it in your investment portfolio.
okay. Well, no, I'm just trying to, I'm not a big fan of cryptocurrencies, but I do notice that it seems to have a new life again. And if somebody was to gift us, 10,000 Bitcoin or something like that, would we be prohibited from accepting that? Or could we accept it and immediately liquidate it into cash?
Well, that's something, I think you could accept it if you liquidated it. You just couldn't invest in it. That's where a gift acceptance policy would be helpful. Do you get a lot of gifts of securities?
No, we don't. We don't. And we retain the right to reject anything that someone offers that comes with some odd string about, I can't think of one off the top of my head, but I'm just, I would read this as suggesting that if it's prohibited under any circumstances, that if somebody offered us Bitcoin, we'd have to say no, without overriding our policy. As opposed to, this doesn't say we won't maintain investments in cryptocurrencies. It just says we won't have any, under any circumstances. That could be the receipt of a gift before liquidation, so.
I can try and rewrite that in a different way.
Well, before you do that, let me just ask Peter and Dana whether you have any thoughts on these changes, specifically on the cryptocurrency and the marijuana.
I'm positive on the changes. I think the issue of whether we can accept cryptocurrency is more a case of what our acceptance policy might or might not be. But I don't think it'd be too difficult to massage the language to accommodate your point on that, Tom.
Okay. Yeah, so I'm fine with just prohibiting the marijuana, investments, but I'd want the flexibility to accept and then liquidate a cryptocurrency if it was. So I agree with the recommendation against investing in, cryptocurrencies for any period of time, but.
Did you clear that with Musk?
I had him review this last night. No, actually, I had his son review it since he was with him at the time. So if you could just, give a little further thought to that, Suzanne, that would be great.
Sure, absolutely. I think that might have been the end of my red ink. Yep, that was the end of it. On a separate note, unless you have any other questions or thoughts.
Well, do you have any questions, Peter? Any questions on the recommendations, Dana?
No, I think they were positive, good changes. I did have one or two comments on this. Nothing of major consequence. One was, throughout the document, we referred to the funds. And it might be helpful if we were clearer and said city trust funds, because it could be confused with the funds we're investing in. That was one comment. And then in section, before Suzanne's changes, it was section G, limitations. We note that the funds may be invested, or the city trust funds is what I would say, may be invested in mutual funds. And I would be clearer than that, and with a preference, or at least state a preference to index funds or ETFs instead of just mutual funds. Oops, I lose you?
Nope.
No, we have you.
Nope, and I tried to share that section on the screen.
Yep, you're there. So utilizing mutual funds. Oh, I see, mutual funds and E ETFs.
Index funds and ETFs.
Your thoughts on that, Suzanne, that change?
Oh, I think that's perfectly reasonable and makes total sense. I'll put that in.
Okay, that'd be great. Anything else, Dana?
Nope.
Okay. So let me just, I think, John, you stated this at the outset before you handed the mic, so to speak, over to Suzanne, but it sounds like you're not recommending any changes in the strategic weight or our benchmarks or minimum or maximum?
Correct.
Okay.
Yep.
So I have one other governance type thing to bring up. When you look at the website for the trustee of trust funds, it's very helpful. I can stalk all of you because I have all your addresses. But when you click on the tab about documents, everything, there's the MS9s, and they stop at 2020. And then there's a section for meeting minutes, and I think it's April of 2020, and that's it. So I would consider either eliminating that tab or keeping it up to date.
Yeah.
I could talk to Stephanie about that. I don't.
Yeah, well, just, I get this running list of things to get to this year, and updating our website is one of them. So you're hired. I will say, one of the things that has happened is that the minutes, the city now has this sort of ongoing calendar that goes back to like 2017, and so if you're looking for minutes, you don't, and this is true of every board or commission they have, you go to that calendar, you can search by the board or commission, you can set the time period within which you want to begin and end, and there you'll find the minutes of every meeting that's been held. And in a case like this, you'll also find the video. So in some ways, that's why you don't see it on our individual site. And that'd be true of every city board and commission. Their minutes and their materials that are at a meeting are all maintained in this centralized archival calendar. The MS one is actually one of it's a good catch because it's one of the things I noticed when I was looking at the website itself. So, but we appreciate that. We may-
No, good point. We need to update that. We should get our policy on the website.
Yeah, exactly. We need a section that has, we have some other scholarship policies, stuff like that we need to have available for public review. All right, so any questions about this? Okay, so just so you know, Suzanne, if you could, take a look at those couple issues and send us back your, let's say, another red line version or something. And I'm going to, once I get that, I'm going to forward it to the city attorney for an overview. And I'm hopeful that when we come back at our March meeting, we'll finalize this, and then we'll provide you with a copy of the final version. We don't need you to come back on unless you've come up with another idea you want to share with us, but we will provide you with the final outcome, so to speak. And these comments are very helpful.
Yeah, very good.
All right, so let me, before you take off, John, I was wondering, I was looking through past things, and we haven't had a peer comparison from you folks for a while. Is that something you could put together for us for the next visit we have from you in 3 months?
Have I ever given you one that was helpful? The last time I went through that, unfortunately, I don't have something super helpful that I can give to you. The last time I tried to update for you something that I think the prior manager had done, but it was full of caveats around limitations in terms of the timing of the staleness of the data and such, as it looked at, I think, a couple of the New Hampshire foundations or pooled funds, but I can try to re-update that for you with the latest data if that would be helpful. You want me to resend you first what I had sent previously, because I am pretty limited with regard to giving you meaningful peer data.
Yeah, why don't you do that? I do recall that part of the problem we had last time is some keep track on a fiscal year, others on a calendar year, and so we were kind of looking at apples and oranges. But to the extent that we can sort of create a peer review, I think it's just helpful for us to know what our, I don't want to say competitors because they're not, but what our
Yeah,
fellow
that's great.
sojourners.
I should have a template that I can update that for you. I'll have that. What is this? Hopefully I can't predict what's been published yet in terms of year-end data, but whatever the most recent data is, I'll update and send to you within the next week or so.
Yeah, that would be great. And if you have some other, groups that you would substitute for the ones that we can't get data on, that would help us as well. I mean, maybe from, like the New Hampshire Charitable Foundation, the Maine Charitable Foundation, that type of thing.
Oh, that's what I was referring to. Yeah, because that data is publicly available.
And there, I can get you, the material I was thinking of is a little stale, but it comes from the National Association of College and University Business Officers. It's stale, but it's kind of informative. I can send that over to you as well.
Yeah, no, yeah, that Nakubo stuff would be interesting to look at, yeah. But, I'm not looking to make this a major project, but I think it's a good reference point to look at once a year.
Sounds good. Happy to update it.
Great. Okay, any other questions from our, and this has been great. Appreciate your time and effort.
Yes.
Our pleasure. Thank you for your time.
Thank you.
Yep.
All right, thank you.
Enjoy your day.
Bye-bye.
Okay. We have nobody from the public to offer comment, but if anybody has any new business or old business that I forgot to add on the agenda, happy to bring it up at this point.
Just one comment, Tom.
Yep.
Thank you for your work on this, on the medals, on the Haven medals, the work you're doing for the city, the legal work. You're perhaps the most undercompensated guy in the state.
Well, I specifically tell anybody I'm not doing legal work. I'm just an informed citizen who is offering his perspective on some of these things. So,
Yeah, well, your perspective is appreciated. Well done.
thank you. I appreciate that. All right, I will entertain a motion to adjourn.
So move.
Wait,
I'll second.
okay. All in favor, roll call. Peter?
Yes.
Dana?
Yes.
And the chair votes yes. Thank you.